Welcome to Learn Commerce PU online classes. Don't forget to like our video and subscribe our YouTube channel for all the updates.
Hello students, welcome to second PUC Accountancy online classes. Students, in the previous class we have solved the problem number 10 of page number 107, right? Now let us move on to problem number 11. I will read out the problem, we will analyze in the meantime and then we will solve the problem. Balance sheet of White Limited as on 31st March 2018 as per schedule 6 of Companies Act 2013. We have to prepare balance sheet from the following information. Information is given. General reserve comes under reserves and surplus unit, very well, right? Then 10% debentures, long-term borrowings. Balance sheet statement of profit and loss, new item. That is surplus. Reserves and surplus comes under reserves and surplus, remember. Because we add it to the capital actually, isn't it? Shareholders fund. So when we have separate item under that, shareholders fund, that is reserves and surplus, we will show all the reserves and surplus under that. Then depreciation on fixed assets. Depreciation on fixed assets, that is actually it should be entered in the statement of profit and loss. But when it is given here and gross block is given, not net block. Gross block in the sense fixed assets. Fixed assets gross. When we deduct depreciation, it will become net block. Net block, that is fixed. What we have to do is we have to deduct this depreciation from the gross block, and the net amount should be entered under, that is current asset, fixed assets. Fixed assets we have to write. Clear? Tangible assets, net block amount we should write. Current liabilities, you know it very well. Current liabilities, it is there. Preliminary expenses comes under other expenses. Other expenses, that is under current asset. Current asset, other current assets, under that it comes, that is preliminary expenses. That is expenses incurred, that is prior to incorporation, preliminary expenses, heavy amount, long term one, isn't it? So it comes under that. Then no, it is not current asset, I am sorry, other non-current assets, it is fixed. Other non-current assets is its preliminary expenses, because it is a long term one, not short term. We will write off the preliminary expenses over a period of time. We cannot debit it to profit and loss account all of a sudden. Every year a part of the preliminary expenses will be written off, isn't it? So it becomes long term one. So let us we will have to categorize it under other non-current assets. Other non-current assets. Then 6% preference share capital. Preference share capital, of course, should be added with the equity share capital. Whether equity share capital is there, equity share capital is not given, so only preference share capital will come. Clear? There is no equity share capital here, so only preference share capital we will write. Then cash and cash equivalents comes under cash and cash equivalents, right? Yes, that's all. Let us solve the problem. Write the name of the company, White Limited. White Limited. White Limited. Balance sheet for the year ending 31st March 2018. Balance sheet. Balance sheet for the year ending March 31st 2018. March 31st, 2018. Yes. Particulars, note number, amount in rupees, amount in rupees. Yes, now let us start equity and liabilities, Roman 1. Equity and liabilities. Equity and liabilities. Under that, equity and liabilities. Under that, first one, shareholders funds. Shareholders funds. Shareholders funds. Only preference share capital is there, correct? So preference share capital, I'll write it, how much it is, 5 lakh. Share capital, under that, share capital, make this as 1 and make this as A. Share capital. We can provide a working note, share capital, under that preference share capital, or no need of that because share capital is already given. So straight away enter it in outer column, no need of working note here. So share capital, how much? 5 lakh. 5 lakh. Then anything else under that? No. Second one, that is point B, reserves and surplus. Point B, reserves and surplus. Surplus. Reserves and surplus. Under that, general reserve is there, then balance statement of profit is there, right? So note number, notes to accounts. First one, reserves and surplus. Reserves and surplus, under that general reserve. General reserve. Provide the columns, I will not tell that. Particulars, amount in rupees, amount in rupees. 2 columns. General reserve and balance in statement of profit and loss. Of profit and loss. Isn't it? Inner column, general reserve how much? 3 lakh. 3 lakh. And balancing statement of profit and loss 1,20,000. 1,20,000. 4,20,000. 4,20,000, right? Then depreciation on fixed assets, not required, not now, it is under assets, isn't it? Then non-current liabilities, are there any fixed liabilities? Current liability is there, then debentures are non-current liabilities, isn't it? So here, enter this 4,20,000. Point number, that is note number 1. Note number 1. Now move on to the next item, non-current liabilities. Non-current liabilities. After that, how many liabilities are there? Only debentures, am I correct? Yes, only debentures are there. So we'll provide note number 2, non-current liabilities. Under that, long-term borrowings, long-term borrowings, long-term borrowings, debentures. Under that, 10% debentures 3 lakh, 10% debentures 3 lakh, outer column. So right here, non-current liabilities, note number 2, 3 lakh. That's all. Are there any other non-current liabilities? No. Any provisions? No provisions. Long-term provisions are not there. Current liabilities. Third one, current liabilities. Current liabilities. Current liabilities. How many items are there? Current liabilities. Current liabilities specifically given. Preliminary expenses should have been under, that is non-current liabilities itself, right? Non-current liabilities, that is long-term, other long-term liabilities, other long-term liabilities, it comes under that actually. Preliminary expenses, reserves and surplus. Under that, from that we have to deduct actually. That is what the normal rule is. We have to deduct from securities premium. Securities premium is not there. So what we have to do is it should be written off completely in the year in which such expenses are incurred actually. They should be written off first from securities premium and the balance, if any, from statement of profit and loss. Statement of profit and loss, it should be written off. So securities premium, if it is there, we have to deduct, otherwise it should not be deducted. So that is what it says. 30,000 we have to show under assets actually. Preliminary expenses is not coming under liability, isn't it? Got confused? Yes. Preliminary expenses are the expenses, heavy expenses incurred, isn't it? Prior to incorporation, those expenses are to be written off over a period of time. Actually, it comes under asset. It is asset. It is not liability at all. If securities premium is there on the liability side, it should be deducted from that first. Securities premium is there, if it is there. Otherwise, we have to enter under other expenses, isn't it? And on the asset side, not on the liabilities side. So here, let us move on. Current liabilities now. Current liabilities under that. Yes, current liabilities separately given. So no headache for us. Cash and cash equivalent, it is a current asset, not liability. Remember, 2,50,000. 2,50,000 straight away. 2,50,000. Isn't it? Are there any other items to be entered? I think there are no other items. There are no other items, isn't it? Yes. Total of liability side 9 plus 3, 12, 14,70,000. 14,70,000 is the total of, that is liability side. Let us move on to asset side now. 14,70,000. Isn't it? Now let us move on to the asset side. Now number first one non-current assets, isn't it? Assets. Under that, under non-current assets, what are the items that have to be entered? Non-current assets, fixed assets under that. Point. Under that, tangible assets, right? Tangible assets. Tangible assets are gross block straight away given. So no other tangible assets, fixed assets. Gross block inner column, how much it is gross block? 9 lakh. Less. How much it is? 70,000. 70,000. So 8,30,000. 8,30,000. 10. Anything else? Right here, fixed assets 8,30,000. Note number 3. 8,30,000. Right? Yes. Then anything else? Intangible assets are not there. Then intangible assets under development are not there. Non-current investments, no non-current investments. Then current asset is there, isn't it? Yes, cash and cash equivalents, current assets. Current assets. Under that, cash equivalents, and one more item is there, that is preliminary expenses, that is other current assets. So we will write under this here current assets. Under that, cash equivalents, cash and cash equivalents. How much it is? Cash and cash equivalents 6,10,000. Then that is preliminary expenses 30,000. Other current assets 30,000. 6,00,000. 6,40,000, right? Yes, right here 6,40,000. Note number 4. Let's solve. So total is 14,70,000. That's all, it's done. Right? 14,70,000. That's all. Okay, I'll take up the last problem. One problem is remaining here. I'll take up in the next class. take an example. Solve the same problem. Why submit?
Don't forget to like our video and subscribe our YouTube channel for all the updates.